Good afternoon, everyone. Happy to be here and see so many clients, colleagues, and friends. The last time we presented live in Tokyo was in 2019, and a lot has changed since then, including our company, S&P Global, through our merger with IHS Markit. I'm Clement Ma. I lead our business, APAC business for company intelligence and analytics. I'm joined by Josh Mintz, who leads our desktop business in Asia Pacific. And then you just met Andreas Darmawan from Tokyo, who leads our APAC data science efforts. Ever since we've been doing this presentation since 2016, our approach has generally been a focus around capital markets activity and outlook. This year, on the back of our combination with IHS Markit, there's a lot more intelligence for us to work with. And so as you'll see, we've tried to cast a bigger net here. I mentioned doing this presentation since 2016, and on the left-hand side, you can see the major undercurrents of risk and uncertainty that were driving the topics in the previous years. So as we look at 2023, in the center of the circle there are still some big headlines. Will we finally see inflation come down and an end of Fed tightening, or worse, will we see a Fed misstep? What will be the impact on corporate earnings, and how much of a slowdown will we see? Is the recent mini banking crisis started by Silicon Valley Bank finally under control? Are private markets vulnerable, and where will they stabilize? And then on a positive note, it's been exciting to see the continued emergence of technology and alternative data coming together to open our eyes to the possibilities. So this year, leveraging a bigger slice of market intelligence, as you can see from the outer ring of the circle, there are a lot of solutions and data sets that power the insights that you'll be seeing in the coming pages. In terms of the agenda for the rest of the presentation, the first few slides will touch on a high-level view around markets, performance, and sentiment. I'll then hand it off to Josh, and he'll share the latest data perspectives on private markets and what has been the impact of the higher rate, slower growth environment. And then I'll hand it off to Andre, and this is the newer piece in our presentation, where he will showcase a few analytical workflows using data at scale to look at some of the recent dynamics in the economy and markets, including the recent banking crisis. And so this year we looked beyond simple stock price charts and take a deeper dive leveraging our solution of alpha signals to look at the market performance across recent regime time periods and the effectiveness of different investment styles. On the left-hand side of the page, focusing on the top chart, you see a 10-year period looking at the cycles of Fed loosening and tightening, with blue highlights indicating the period of Fed tightening and white representing the periods of loosening. And then on the top right-hand side of the page, we see a shorter 5-year time frame looking at the periods around and during the coronavirus, with red shading representing the roughly 3-year COVID period. The blue line for reference on both charts is the S&P 500, and the dark red line represents the target Fed funds rate. And then the exciting, And then the exciting piece to draw your attentions to, I can't find the cursor. To draw your attention to are the rainbow-like Lego blocks underneath the charts where we have columns representing different index universes. At the top of each table are the average index returns corresponding to regime time periods, and then the bars below are a relative over or underperformance aligned to each style composite. And that's based on using a long-short style of approach to investing in the top 20% of that style and shorting the worst 20% of that style. And so just a few quick observations to highlight. So looking across all four regimes, earnings quality in red is a consistent contributor to the S&P 500 as compared to both developed and emerging Asia. Where we're seeing now in the tightening regime in the top left blue quadrant is that other styles of valuation in blue, price momentum in orange, and volatility in gray have surfaced to the top, suggesting that value momentum-based stock selection is back in the spotlight and market participants are being more risk tolerant. If we look to compare developed Asia to emerging Asia, it seems like price momentum in orange, capital efficiency in yellow, and valuation in blue are more consistently important in developed Asia. We also think it's interesting to see that analyst expectations in green have been a more consistent driver of outperformance for Asia, especially emerging Asia, during both the blue tightening regime and the red COVID regime, perhaps highlighting a level of market inefficiency and that people lean to the experts in times of elevated risk. This slide is purely for illustrative reasons for discussion, but certainly there's a lot of power in alpha signals to dive deeper and create multi-factor models to enhance investment decision-making. As we think about recent regime time periods, another angle is around the potential impact on corporate earnings. Frank Zhao, one of our lead quantamental researchers, recently authored a study analyzing corporate management sentiment in earnings calls going all the way back to the time of the financial crisis. In this current period of elevated risk, how is management sentiment changing as compared to prior periods of uncertainty like the financial crisis or the COVID-19 period? And might that provide hints on where the economy and earnings might be heading? If you look at Frank's chart on the top reflecting the S&P 500, Frank has ranked every earnings period since the financial crisis based on the average of the net positivity sentiment score, with the taller bars being the more positive rankings. Frank has then shaded the top 20th percentile periods in green and the bottom 20% of the periods in red. As expected, sentiment was by far the worst during an extended stretch of the global financial crisis if you look at the red bars on the left. And then if you focus on the green bars, the period with the best sentiment roughly sandwiched around COVID-19, especially a lot of positivity coming out of the pandemic. If we focus then on the most recent quarters, against the backdrop of the concerns around rising interest rates and the economic slowdown, there were a lot of questions on how negative it would get. But thankfully, Frank summed it up in his inaugural research that guidance was far from falling off a cliff. In fact, Q4 2022 marked the first improvement in sentiment since 2021, with a wide breadth of companies conveying a consistent message of earnings growth. We also saw rare negative sentiments for both Silicon Valley Bank and Signature Bank just prior to their implosions. And that nicely feeds into the banking analysis tool that Andre will be showing later. Touching quickly on the bottom chart for illustrative purposes, we tried to replicate Frank's methodology with an APAC universe. It's a bit more complicated to digest as we attempted to split between developed Asia in purple and emerging Asia in blue, with the same green and red shadings for the top and bottom percentiles, but we thought it was important to see some specific trends here. In particular, we see that sentiment in both developed and emerging Asia took a bit longer to recover coming out of the global financial crisis. We also see that sentiment in emerging Asia turned quite negative even ahead of COVID. And that makes sense with the escalating concerns around China, with the trade war impact, global decoupling, and the pressure on tech companies. There's a lot more to dive into here, and I don't think I do Frank's research justice, so we would encourage you to download the white paper and watch his most recent webinar if there's interest. Changing lanes, this slide looks at IPO activity and the largest exchanges driving that activity. On the left-hand side, we have IPO counts by company location. APAC is the tall, multicolored bar where we've highlighted select APAC markets, including Japan in light blue, China in dark blue, and Hong Kong in pink. In terms of issuance activity, the story here in APAC is relatively strong, though we are behind the levels of recent years. And that's a big contrast to what we're seeing in the other regions where they're significantly behind the prior years. And then on the right-hand chart, that visualizes the IPO market by aggregate deal value and the top exchanges globally. There are two sets of circles here. A dark set circled in red, which shows the first half 2023, and a lighter set of circles that show the full year 2022. The size of the circles represent the aggregate IPO deal value, and the height of the circle is the ranking within the top 10. As we compare the two sets, we can see that the top 3 spots have remained unchanged during the period. But what really stands out is the reduction in the aggregate deal values. Of course, issuance activity is just part of the IPO story, and the performance of these IPOs post-listing is also very important. So we like to include this chart in every year's deck, as it's proved to be a very popular takeaway slide. Here we examine IPO performance from the offer price to the close price as of late July. The size of the circles represent the deal size, and the height of the circles represents the price increase. And there are a couple of interesting takeaways from this visualization. The first is that Asia-Pacific IPOs in orange have shown greater outperformance compared to the other regions. The second is that the largest of the listings have not necessarily performed the best, with small and mid-cap deals making up the majority of the 3, 4, and 5x gains. And so seeing many of these IPOs making these outsized gains leads us to wonder about the next private market opportunities that will power these future IPO returns. With that, I'll pass it over to Josh to dive in there.
Thanks, Clem. Really excited to be here for Tokyo in this event in person after so many years of virtual engagement. Let's go ahead and take a look at private markets. To kick things off, I'd like to share some insights from our recently released 2023 Private Equity Outlook Survey. And each year we poll our clients on markets trends, and this year's survey is our largest yet, with over 370 PE and VC firms responding. This slide looks at responses for how deal activity will perform in 2023, with green representing an improvement, gray remaining the same, and red a deterioration. And starting out with the furthest left column representing APAC private equity responses, we can see that 57% of firms believe that there will be an improvement in deal activity in 2023. And this viewpoint on private equity is the most optimistic across the regions. To provide a comparison, we can view North America's responses in the next set of columns, where there's a more divergent viewpoint, with 30% of respondents expecting improvement in private equity deal activity, coupled with 29% expecting a deterioration. Now, from a venture capital standpoint, the second column shows APAC respondents' outlook, with 44% predicting an improvement in deal activity, but also 25% seeing a deterioration. And this is broadly in line with what we're seeing for North America VC respondents. However, looking towards EMEA, in the middle of the slide, 54% of firms envisioned an improvement of VC deal activity compared to only 14% predicting a deterioration, really reflecting the optimistic outlook within this region. And so overall, for both private equity and venture capital strategies, more respondents predict an improvement in deal activity compared to a deterioration. This year's survey was quite special, as it was our first time to include limited partners with over 130 participants. This slide asks the question, which asset classes is your firm most likely to adjust or maintain allocation? Green represents increases, gray a maintaining of allocations, and red a reduction. And so looking towards the top left for private equity, 43% of LPs indicated they would increase allocations into the asset class. And this is the most positive among asset classes for this question. And that compares to only 23% reducing allocations to private equity. And this differs quite a bit from LP views on venture capital in the top center, where there was a near even split between those increasing and decreasing allocations to the asset class. To touch on one last asset class, to round things out, LP views on infrastructure are quite bullish, with 87% of LPs responding that they would maintain or increase their allocations. So these survey results helped set the stage for the rest of this section. Before jumping into fundraising activity, I'd like to point out that you can link to the full year survey results by clicking on the 2023 Private Equity Outlook link at the bottom of the slide. And moving on from survey results, we can examine private equity and venture capital fundraising activity sourced from Preqin data on the Capital IQ Pro platform. And here we show the distributions of new funds raised by fund manager location, with orange representing funds managed out of APAC, gray representing North America, and the reddish burgundy representing EMEA. The darker shade of each color depicts private equity funds, and the lighter shade, venture capital funds. And there's been a long run-up of increased fundraising activity within the asset class. 2021 was certainly a bumper year for both private equity and venture capital, with some of the highest quarters of raises within our study. As we moved into 2022, the third year of the pandemic, we saw a reduction in quarterly raises compared to even pre-pandemic levels. And for the first half of 2023, this has been one of the slowest starts we've seen since 2014. However, like working with any data set, we must also consider the collection time lag. We pulled this data last week, and so it's likely we'll continue to see these first half numbers inch up as Preqin collects more data. Fundraising is certainly an important component of studying trends within alternative asset classes, but equally important is assessing how those funds are performing. Which brings us nicely into our next slide, looking at population charts for benchmark fund performance. And this data is again sourced from Preqin via the Capital IQ Pro platform, and looks at the performance of Preqin benchmarks based upon their primary geographic focus or the region where the benchmark fund's constituents are primarily investing. And we're again using the same color schemes as before, with private equity shown as the darker colors and venture capital as the lighter colors. And so starting with the charts at the top of the slide, we're examining the benchmark's internal rate of return, or IRR. And looking towards APAC in orange, we're seeing more recent vintages of 2019 and 2020 where VC has outperformed PE. But when we look over to North America and Europe, we're seeing more volatility between which asset class outperforms. And then shifting our attention to the bottom of the slide, we have the net multiple, or cash-on-cash returns. And here we're seeing a similar story where in APAC, VC strategies have been outperforming PE. And this is along the same lines we're seeing in North America. Looking towards EMEA in red, there's more variance between which asset class outperforms. Fund performance is really just part of the story for private markets. The real driver behind that is deal activity. And to help spark the imagination for potential new deal opportunities, we've included our latest roadmap over the coming months, where we're excited to more than double our coverage of APAC financial data on private companies across 8 markets in total. We've already delivered Malaysia, Thailand, and Singapore, and we look forward to launching Taiwan next month. Now, let's go ahead and take a look at deal activity. Similar to what we saw in fundraising activity on a previous slide, we're also seeing a slowdown in the number of deals being conducted by PE and VC firms. Looking towards the top half of the slide, we have the global deal count distribution conducted by PE and VC firms by region. Both 2021 and 2022 were significantly above pre-pandemic levels across all regions. But as we closed out the first half of 2023, we're tracking behind recent years on a normalized basis. EMEA, in red, has led the way with 3,076 deals, followed by North America in dark gray in a close second at 3,047, and APAC in orange with 2,756 deals. And then as we move our attention to the bottom of the slide, we have the distribution for deals in our focus geographies, with China in dark blue, Japan in light blue, India in yellow, Australia in brown, Hong Kong in pink, and Singapore in purple. And a couple takeaways here. The first is that all of the geographies are down on a normalized deal count basis compared to 2022. However, if we consider the story here in Japan, there's been growth each year from 2019 to 2022 in terms of deal making, and we're only modestly down compared to 2022 for the mid-year mark compared to the other regions. So there can be quite a lot of positivity about where we stand thus far. And so seeing this new deal landscape makes it all the more important to identify the hot and niche upcoming sectors, which just happens to be one of the questions we asked in our 2023 Private Equity Outlook survey. The left-hand side of the slide shows the survey results for the question, which will be the hot and niche sectors to look out for in 2023. Private equity responses are shown in light blue and venture capital in dark blue. And here we can see that the top 5 niche sectors this year, according to the survey, are clean energy, health tech, business-to-business SaaS solutions, robotics and process automation, and fintech and payments. And then shifting our attention to the right-hand side of the slide, we see the actual results for first half 2023 PE and VC-backed M&A and rounds of funding. And here we're using our new topic tags niche industry classification, which looks across business descriptions for keywords and phrases and then attaches them back to the shared topic tag. And here's where things really start to get interesting. We're actually seeing the results in the first half tracking closely with the survey. Clean energy, the #1 survey response, came in on third on a deal count basis with 224 deals, and 7th on a deal value basis with over $9 billion in aggregate deal value associated with the tag. Looking at robotics and process automation, the 4th ranked survey response, which pairs over to artificial intelligence and machine learning, were the #1 and 2 spots on a deal count and value basis. One important note here is that deals can have more than one topic tag associated with them. So we're likely seeing a lot of overlap between artificial intelligence and machine learning. But overall, the slide really connects the survey back to the actual trends we're seeing in the market, particularly around clean energy, which is a thread I'd like to pull a little bit more on the next slide. This slide is a bit complex, but we'll walk through each section here to explain the story. Globally, there have been 355 clean energy IPOs since 2020. And so what we've done on the top half of the slide is to take that list of clean energy securities and run it through our newly launched investor screening tool on Capital IQ Pro. What this has allowed us to do is get a lens on who the top institutional investors are across that cohort of securities. The chart at the top left shows the aggregate market cap of those holdings by top investor over time. How the tool works is it normalizes the share prices to the most recent close price. And so what that means is any increase in size you're seeing in the chart represents an increase in the number of shares held or new positions rather than an appreciation in share price. And we've included in the bottom left of the slide a distribution of those clean energy IPOs by transaction count to provide a better sense of when those securities came to market. And so if we now move our attention to the top right of the slide, we can see the list of those top institutional holders. The largest holder by market cap is the National Pension Service of Korea, who holds a sizable $5.7 billion position in 2 companies within the cohort, with the vast majority of that invested in LG Energy Solutions. In the number 2 and 3 spots, on a market cap basis, we have Vanguard and BlackRock. And this really doesn't come as a surprise, considering their publicized investment remits around climate change and ESG. Where this really starts to get interesting is if we focus in on the names that are highlighted in orange, representing investors here in APAC. It's very exciting to see names like China Asset Management, GF Fund Management, and E Fund Management with not only sizable positions by value, but also holding 50, 60, or even 70 of the clean energy securities. And to pique the imagination, we've included 2 potential upcoming IPOs from our key development data set in the bottom right of the slide. This tool can be quite useful to our investment banking clients in the audience as they consider investors for these upcoming IPOs. And so now that we're back onto the topic of IPOs, I'd like to close out with one last slide. Here, we're using another new tool on Capital IQ Pro called the Doc Viewer to conduct a bit of high-level natural language processing on IPO prospectuses. And what we've done is search across our database of prospectuses to identify the number of prospectuses that contain the phrase ESG, and then compare that as a percentage to the number of IPOs in a given region per year, which we've represented as the green bar on each of the regional charts. If we start at the bottom of the slide, back in 2018, it barely registered the number of prospectuses that contained ESG in APAC and North America, with around 2% in EMEA containing the phrase. As we closed out the first year of the pandemic in 2020, APAC on the left-hand side led the way with that number increasing to 5%. More recently, in 2022 and through the first half of 2023, we've reached levels of about mid to 12, 13% in APAC. However, if we look towards North America, that number has grown to over 18%. And looking towards the right-hand side for EMEA, there's been a big uptick in 2023, where that's already grown to nearly 30%. Now, this was really a light-hearted NLP exercise, and the Doc Viewer has capabilities beyond this for workflows like table extraction to Excel and collaboration. But for a real detailed look about what can be done from a data science standpoint, I'm now going to pass things over to Andre for that deep dive. Andre, over to you.
はい、皆様改めてこんにちは。これから日本語で話させていただきます。はい。ですね、私ね今日の話について少しデスクトップの環境、作業環境よりも少し面白くデータサイエンスの方に踏み込みたいと思います。今回のテーマはですね、プラクティカルという単語が、はい、わざと入れてます。でこの、裏話で一応データサイエンス耳に入ったらイメージ的にすごい複雑なこと、マスター・オブ・サイエンスとか PhD 持ってないとデータサイエンスはできませんというイメージがあるんですが、もし、そういう、ね、スティグマが今日私が適用しているやり方でもう少しデータサイエンスも実は普通のパワー BI ツールでももうできますよという今日のメインの課題になりますですね。今回私の話で3つの提供している課題の中には、一切でもマシンラーニングも機械学習を使わない。複雑の視線言語処理も使いません。AI、もちろん AI も使いません。はい、で今回のトピックスですね、近年でS&P グローバルとしてですね、データお客さんに提供している中に、一番聞かれている話題になります。インフレーションとか、あと知的採算の分析と、あと危険信号ですね。どうやって事前に早期認識できるようにやり方ないかでもよく我々が聞かれました。 はい、じゃあ今回のデータサイエンス、もちろんデータサイエンスがある意味で、数字を Excel の環境よりデータの量が必要なので、我々が今日私が全部やってたダッシュボードとかですね、すべてが我々の提供しているクラウドデータベースね、スノーフレークシャーと共同提供していて、我々の財務データとか、もうほぼ企業のデータなりに、ほとんど全部スノーフレークに載せているので、そこで皆様がユーザーネームとパスワードだけでブラウザで一応ラージスケールのデータベースのアクセスできるようになります。はい、一番最初の話題ですね、インフレーションですね。オルトラナデータとかも最近も結構話も出てきまして、オルトラナデータを使ってインフレーションでどのぐらいインフレーションの度合いって認識できないかとよく話が出てきまして、で今回の理論に基づくのはHuman Behavior ですね、Behavioral Science で、もし一つの話題に対して興味があるときに、絶対何回もその、話を相手先とかも繰り返すことがあります。じゃあこれそれに基づいてで私が今回の作業の中に一応典型研究とかですね決算発表のデータを使ってでその中にインフレーションの単語を認識してでそのインフレーションの単語を一応数えるだけですね。でなぜレギュレートリーファーリングとかその典型研究選ぶ理由のはアメリカとかですねもちろん一回企業側が一回こういった典型研究そのレギュレートリーファーリングを出せば取り返せないですね。永遠に残るのでそこで慎重に書かないと市場参加者の捉え方もちょっと違ってもしかして誤解されて株とかも売られているとかも企業側も困りますのでそこで本当に慎重にやらなきゃいけない。今回の分析の中に一応材料としてですね弊社のマシンリーダブルファイリングという商品でそこでSQL 化でほとんど全部のテキストデータをそのファイリングをテキスト化されていて一応機械に読み込みしやすい形になりますですね。はい、じゃあ実際に本当に例えば今回の分析は S&P500 のになりますがこの S&P500 の銘柄でその企業側が本当にインフレーションについて気にしているかどうかここでパッとグラフ見たら分かります。大体徐々に2021年から2023年まででもほぼ8割ぐらいですね。大体皆さんがその決算発表の中にインフレーションの単語が入っています。はい、じゃあ実際にラージスケールサーチでどのぐらいの資料こういうもし資料でやろうとしたらどのぐらい資料で読まなきゃいけない結構量がありますですね。セクターによってもちろんメンバー企業も違うので一応例えばファイナンシャルとかほぼ1500年間1500に近い書類とかがあります。はい、じゃあ今回の単純にそのインフレーションの単語を探してそこで回数るだけでそこでどういうパターンが見れるのはこのチャートで一見して分かります。一番インフレーションに気にしているセクターはコンシューマーステープルですね。ここは大体我々が日常の生活の中に欠かせないものがあるのでもちろんサプライチェーンにもすごい関係されている。そこで値上げされたらもちろん消費者に最終的にもちろん我々が負担しなきゃいけないので。じゃあ一番面白いのはですね近年の中に2021年から2022年とかにつきまして IT インフォメーションテクノロジーコミュニケーションサービスが突然インフレーションの気にしている度合いが3倍ぐらいになるとかもしかしてこのセクターはインフレーションの影響が遅めに受けているという話もあります。もちろん今回のインフレーションの単語を数えているだけなのでコンテキストがここに中にあまり気にしてないですね。例えばそのインフレーションがとあるセクターに悪い影響かいい影響かここにもちろん認識できないのでそういった分析のご興味がある方がもちろんぜひもうちょっとアドバンスの視線ご処理に挑戦してみてください。はい、じゃあ次の 話題に移ります。次の話題は知的財産についてですね。どうやって分析が一番最初の入り口がやりやすいとか、我々が提供しているのはパテントだって特許データから分析が一番いいかなと思います。パテントデータ、特許データで基本的にどこで見つかるのは、基本的にパテントデータはこの World Intellectual Property Organization が管理しているので、彼らもデータベースが無料でオンライン上でブラウザで一応アクセスはできます。ただ、その彼らのウェブサイトでアクセスするときに、そこで例えば皆様にすでに手元にある財務データとか、他の、その企業のデータでどうやって連携するとか、そこの ID のマッピングが、かなり大変な作業になりますので、ここで、我々もこういった IP クエリさんと提携を組んで、そのデータベースの特許のデータをデータベースされていて、もちろんその ID のマッピングとかで、弊社のキャピタル IQ-ID、我々のユニバーサル ID もマッピングされていて、他のデータセットでも非常に連携しやすい、使い勝手がいいものになりますですね。はい、もちろんこういうどういった作業ができるとかですね、一番簡単なものは、トレンドですね、東京の世界で一番今申請とか発行されているものが一番、チャンピオンはもちろん、アメリカがまだナンバーワンで、その次はですね、アジアパシフィックの中にジャパンはナンバーワンで、その次はチャイナとサウスコリアと台湾が一番この順番で特許が発行されています。はい、例えばもうちょっと具体的なテーマですね、特許の世界に業界の分類と一緒で、各特許に技術に対して ID がそういったパテント ID というクラシフィケーションがあります。で、例えばソーラーとか、ソーラーもID ここまではソーラー技術、ここからここまではグリーンインフェントリー、グリーン技術とか、そこでは分類があります。例えばソーラーパテントだけ調べたら、どこが一番ソーラーの技術が持っているのは、まだここで見ると、アメリカがまだナンバーワンで、その次はジャパンとチャイナとドイツとサウスコリアの順番になります。はい、じゃあ次はもうちょっとここでチャートだけ見たらちょっとなかなかデータの生かし方も普通になります。ここから、少しちょっとパワー BI ですね。一応通常に皆様オフィスとかにある場合はもうここね無料でダウンロード、マイクロソフトから無料でダウンロードできます。次の、ここの、データを特許データを使って、例えばプライベートマーケットの中にですね、近年でその買収されたプライベート企業ってどういった技術を持っているとか、ここから特許のデータを使って分かります。近年アジアパシフィックの中にほぼこういった H シリーズが多くて、H シリーズは基本的に技術ですね。そこでその中にOLED、その有機 EL の技術とかバッテリーとかソーラーパワー、ソーラーパネルとか、ここがアジアが一番大得意の分野になります。はい、もちろん他の使い方もありますので、一番大体ここでねプライベートマーケットとかその IPO 前とか、あとはプライベートエクイティの中にどういったターゲットカンパニーとか調べたら、もしこういう技術持てればいいよね、ここで逆計算で特許データ、まずは先の技術探して、でそこの技術を持っている持ち主を探して、そこでターゲティングもになるかなと思います。はい、次の話題ですね、一番多分今日のメインになると思うので、今回のですね、アメリカのSVB のクライシス、バンキングクライシスがありまして、大体 SVB がみんなの話の中に、なんで我々が逃したんだろう、もうちょっと他の信号ないの、黄色い信号ないのかな、普通のそのクレジットモデルとか全部SVB が一応まだ大丈夫だったという話なんですが、今回は我々のコンスチームでこのテミシーが出している論文の中に一応バンキングブルースという信号を作っていて、このバンキングブルースは基本的に3つの材料があります。まずは Liquidity Alert、ここは満期保有期間の証券と現価格の比率、一応マークトマーケットロスですね、ここのリクイディティの信号になります。で次はインベスターセンティメント、ここは貸し株のデータを使ってその市場参加者のセンティメント、その借りられている空売りのために借りられている株と貸し出される株の比率になります。 で次はマネジメントアラートが、ここは決算議事録、決算発表が行うときに、そのイベント、エーニングスコールの中に、マネジメントが発表、口に出したものをセンチメント化して、でそこでマネジメントセンチメントに読めると呼ばれると思います。ここの3つを合算して、バンキングブルースになります。今回も特別なそのまま SPB の事例を見てみると、2020年の第3四半期から、直近のデータから見ると、大体バンキングブルースアラートが100になります。一応100は一番マックスな、一番危険というある意味で、ほぼもう1年前からこの信号はもうほぼ、危険な板金になりまして、ここでもうちょっと材料をファンダメンタルに見ると、そうしたら満期保有期間のセキュリティと証券と、その SPB が持っているトータルアセットですねの比率がエクスポーシャーどのぐらい、もう彼らが 44% ですね。ここで少しだけがロスがあれば、もうそのバランスシートに対して44のエクスポーシャーがあるので、ここで耐えられバンキングランとかね、みんなお金出されるときにも耐えられない状態になりました。じゃあ他は今現在アメリカでどういった状況になるとか、ここを見てみますと分かります。一応今並び替えがバンキングブルースが一番危険なところから、一番上に出てくるのはバンク・オフ・ハワイ・コーポレーションが出てきました。彼らはもうリクイディティ・アラートはもう一番もう悪い 20% のところに入っていまして、でエクスポーシャーは 21% ぐらいですね。一応今回はね SPB の 43% 超えているバンキングがあって、ミッドランドキャピタルホールディングスですね。ここはただその彼らのまだリクイディティアラートの相対比較の中にまだ真ん中中央のランキングになります。こういう満期保有証券とかですね、一応日本の企業も決算発表の時に出しているので、日本はどういう状態とかになりますと、こういう状態になります。一番今エクスポーシャーが大きいのは今ジャパンポストバンクが一番大きいで 12% になりますが、大体まだもしかしてここにまで耐えられます。みずほ銀行とか一応もしかしてマーケットロスが大きいかもしれないが、エクスポーシャーがただ彼らのバランスシートに対してまだたった 1% とか、一応ここで定量化分析なので、もうそこでここに出てくる銀行とか必ずし危ないというわけではなく、こういうトップダウンスクリーナー、こういうツールをトップダウンスクリーナーとしてご利用にいただいて、でそこからボトムアップ分析入ればもう徹底的にもうこういった危険信号とかも早期発見できるかもしれません。はい、一応私の話はここで終わりにしたいと思います。